What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to talk about why the crypto market is rallying and why the rally is likely to continue. This is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So first things first, guys, starting with why the crypto market is rallying. By now, I'm sure you've all heard that it has to do with the CPI, which is kind of like the inflation for corporations in the US. And that inflation print, of course, came in way lower than expected. And of course, falling inflation is supportive of more interest rate cuts from the Federal Reserve. And of course, the Fed is going to be doing its rate cuts next week. So of course, again, PPI coming in lower than expected, super bullish. And some of you guys might remember that I actually mentioned in yesterday's video that I thought the PPI would come in lower than expected. And I also mentioned that the CPI would come in lower than expected, and I would do an analysis of that today. So just really quickly, super straightforward. I guess on the more straightforward front, it has to do with oil prices. In August, oil prices fell quite considerably. So of course, that was kind of a hint to me that, okay, well, that probably means that PPI and CPI will come in lower than expected, because of course, oil is a major input into a whole bunch of stuff, especially like transportation. And, think of how many people are like filling up the gas tank every single day in the US. So if oil prices fall, then of course that makes a whole bunch of stuff in the economy cheaper. And not only that, but there's kind of like a second order effect there, you could say, where falling oil prices is kind of indicative of economic weakness, which is likely to show up in other, you could say, like coincident indicators, I think is the technical term. But long story short is, when it comes to forecasting PPI or CPI, in my experience, just looking at the oil price has been a pretty good indicator. Of course, there's a lot of nuance, and one of the, I guess, two of the nuances here is that the reason why the CPI came in hotter than expected last month had to do with the seasonal kind of like revisions. And long story short is, this macro analyst Warren Pies here basically dug into the data and basically is, I guess, argued, or a couple days ago here, that the CPI is likely to come in lower than expected because these revisions are likely to swing to the other extreme. Basically these small, like the CPI is basically a basket of different things, right? The things that cause CPI to come in higher than expected last month will probably cause it to come in lower than expected this month, I guess, is the simplest way I can explain it. So of course, if the CPI comes in lower than expected later today, then you can expect the current rally to continue. In Bitcoin's case, we can see that Bitcoin's looking really good here. You guys might remember that there's a CME gap around 117.2 thousand, which if you just look with your naked eye here, you can see that there is a clear resistance line somewhere around 117,000. So don't be surprised if we get a lower than expected CPI print and that Bitcoin rallies back up to this resistance level, which is also where the CME gap is. And then of course, looking at others, from a technical perspective, others breakout is basically technically confirmed here, I would say. But of course, it would be nice to have some follow through there with the CPI. And it wouldn't be surprising, on the other hand, for others to kind of like come back and retest this 310 billion level before moving higher. From a technical perspective, that would be completely normal. So if the CPI does come in, let's say, higher than expected, or, within expectations, and it causes a little bit of a pullback, that would be completely normal from a technical perspective and not a reason to panic. But I do think the CPI will be coming in lower, and that others is going to continue breaking out here, and probably, zooming out here, going all the way back up to this like 360 billion level, potentially by the end of the week, which, we'll have to wait and see about that. But to get a huge spike on the back of a cold CPI going into the end of the week, even somewhere to, let's say, 340, 350 billion, I think that would be pretty likely for others, which is of course all the altcoins outside of the top 10. Moving on now to Ethereum, similar idea. Ethereum's looking really good here. I was mentioning in yesterday's video how this prolonged period of chop is basically identical to a dip, because it resets sentiment and positioning. Like I mentioned, like everyone was feeling super bearish when Ethereum was up around 5,000. Now that Ethereum is down, barely, like, I don't know, whatever it is, like 4 or 5% or 10% or whatever. Everyone's feeling super bearish. They thought that Ethereum would collapse. But as you guys can see, Ethereum is starting to squeeze here on the daily. It's about to get back above this Bollinger Band moving average on the daily. And of course, a lower than expected CPI print would do exactly that and probably cause Ethereum to spike much higher. Anyways, guys, if you're enjoying the video so far, then do check out the Coin Bureau deals page. That's where you'll find up to 50,000 USDT bonuses on BitGet, as well as a free AI a trading assistant trial, a super awesome exchange that I've used in the past. We have a whole bunch of deals on other exchanges as well, like Bybit, where you can get up to $60,000 in rewards, Axiom, where you can get 10% cash back for life and a 2x point multiplier. Axiom is kind of like this platform where you can trade meme coins on Solana. And of course, this points multiplier suggests that there's going to be an airdrop at some point. So again, do check that out. And of course, we have Aaron's Better Traders course here with a 10% discount and a whole bunch of other exchange deals and tools, and whether it's tax tools or trading bots, or even we have discounts on hardware wallets. So do check out those deals using the link down in the description. They don't cost you a thing. When you use those deals, they help you out, they help us out, and of course, they help out our partners. Anyways, guys, moving on now with Ethereum. If you look at the ETH BTC chart on the monthly, it's actually looking pretty damn good, I must say. We saw a little bit of a break above this Bollinger Band moving average on the monthly. So I do think that that ETH is going to continue powering higher relative to Bitcoin. I think that it'll go at least somewhere up to around 0.055 or 0.06. 0.06. So, another, I guess you could say another 50% gain relative to Bitcoin. I think that would be in the cards, but I don't think that Ethereum is going to be going much higher than that relative to Bitcoin. But of course, we'll have to wait and see. But all things considered, it's looking really good there. Of course, moving on to Solana, I do think that Sol is going to hit around 240 by the end of this week. It's something I'd been mentioning yesterday. I think when I said that, Sol was at around like 215, and now it was like creeping up on like 225 or something. So, the idea that Sol could hit 240 by the end of the week, especially with a cool CPI print, I think that's very likely. And of course, a cooler than expected CPI print would be very bullish for altcoins, which includes Ethereum. So that's kind of, consistent with what we see here on the ETH BTC chart, which is looking pretty bullish, both in the long term and the short term. Same thing for SUI and a whole bunch of other altcoins. Like, they're all bouncing off kind of like the lower ranges they've been trading in for a while. Again, you can kind of see that with others, that everything was just kind of chopping in a range. And now we're finally starting to see, like a break to the upside. In SUI's case, the next stop would be somewhere around $4. And I do think that could also be hit by the end of this week if there's a cooler than expected CPI print. Looking at the total crypto market cap, it's also on the brink of a breakout here, breaking above this resistance level around 3.9 trillion. If it does break above that level, then it would probably rally somewhere up to 4.4 trillion. So that would translate to roughly, I don't know, whatever it is, like a 10 or 12% gain for the crypto market as a whole. And of course, most of that would be coming from altcoins. So, 10 or 12%, you might think, oh, that's nothing, but most of that market cap gain will be coming from altcoins. And of course, you can see that using the Bitcoin dominance chart here, which it looks like it's going to start breaking down on the daily, but it's still been chopping in this range. But I do think, again, lower than expected CPI print, that would probably be enough to cause Bitcoin dominance to continue falling lower. And if it's not the CPI print that does it, then you can bet that it's going to be the Fed's rate cut next week. But of course, we'll cross that bridge when we get to it. Anyways, guys, if you did make it this far and you did find that information helpful, be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.